Today we're going to talk about developing consistency and becoming consistently profitable. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. It's Thursday. We had some massive moves again yesterday. Textbook setups. Today we're going to be talking a little bit differently, off track. We're going to be talking about developing consistency and becoming consistently profitable. We're going to review yesterday's charts, which by the way match our high bull, low bear candle video from yesterday, but also the 1, 2, 3. We saw measured moves. Again, the same stuff is going to happen over and over again. We saw a squeeze on gold in London. We saw the 1, 2, 3 at the beginning of the session. We saw a squeeze this morning on gold. So again, we're going to review some simple concepts, but we're going to talk about developing consistency. A lot of questions related to trading, lifestyle, income levels, but I think it's my main objective when I started trading, of course, was to a couple of things: create a scalable income, because obviously money is what attracts us to the markets, and I was limited in terms of being a health professional. You can only see so many patients per week, and you can only have so many practices and so many associates and possibly have other products and whatnot, but it was still being tied to an office. But trading brought on a whole host of other challenges that I didn't see when I first was exposed to trading and the markets, which is over 20 years ago now. And from that led a journey that brought me down a very winding road. A lot of highs, a lot of lows, but through that, the desire to develop the expertise and the mastery, not only to become consistently profitable, developing a consistent income, but also to master the craft of trading, to really master the craft of trading. And we're going to talk about that today. We're going to answer some questions that people have asked. We're going to talk about, I guess, what can be done, but the work ultimately needs to be done by each and every one of you to figure out where those barriers are going to be, not only in the trading side of things, but in your ability to actually perform the trading and develop it and grow your trading business. So there's two sides to that. There's the trading model and having the edge, but also the person being able to not only execute and master that edge, but not having barriers to them being able to do that consistently, day in, day out, week in, week out, whatever that may be, regardless of your time frame, whether that's end of day, intraday, whatever that may be. So developing consistency, becoming consistency, the first thing I think you need to sort of figure out for yourself, which I needed to do, is why am I doing this? Obviously, we're attracted to the idea of freedom, time, lifestyle, scalable income. So people have asked me, why don't you have a lot of Instagram posts of your cars and flashy house and everything else? And to be honest, I have 2 Hondas, and they're both paid for, and they're nice cars. I have 3 kids. The first one that we got has been thoroughly used and beaten to a pulp, but it's still a really good car. It's a nice car, but my kids are very active, very sporty. Typically we're going almost every single day with one of them to a training or a game function. They play multiple sports. I have very athletic kids. They play in state competitions and whatnot, so that involves a lot of time and money. But why do you want to become a trader, or why is it that you are attracted to trading? A lot of people want to get out of their job. They're not happy. They don't like their job. I actually liked my job, but I felt limited in terms of what I could do. I had a great clientele. I enjoyed practice. It was very good to me, but I was also passionate and obsessed to some degree about trading, the mastery of the challenge to master the process of trading and master the skills around that. So that was an attraction to me. I was attracted to the challenge about the markets. Obviously I wanted to have more time freedom. Lifestyle, we have family in 3 countries, so we do travel quite a bit. We go overseas a lot, and that obviously requires the ability to, trading gives you the opportunity to be able to work from anywhere. Now, you're not going to see me down at the beach, although I'm at the beach 3-4 times a week, but I'm not bringing my laptop down there, making trades and taking pictures and putting them on Instagram. But we do live very close to the beach, and it is a very beautiful beach here. But what's important is that with any job or profession, at some point there's a time expiry in terms of what you might be able to do physically or professionally before you sort of have to retire or fade out. Now, trading is a profession that you can do until the day you die, as long as you're obviously performing and executing and being able to profit from the markets. Your knowledge and skills hopefully will only continue to get better and better and better and better over time, which again, we're going to talk about that. Now, what is it that you're going to trade? Now, for me, I started off in futures. There was the Australian SPY futures and the S&P futures. This is around 98, 99. We were primarily trading end of day, but as I've talked about in other videos, that evolved to forex when it first came out, and I really didn't understand the forex market or the product around forex, the spreads, the buy and sell, all that sort of stuff. But obviously over time you learn that. And even in the last 6 months, as I've talked about, my main currency trading pairs were the pound crosses, because they move. Obviously a few of the pairs, the spreads are a bit wider, but there's movement in those pairs consistently, day in and day out, week in and week out. Hence the title, 50 pips a day. So now I'm mainly only trading gold, and primarily because gold moves all the time. It has massive moves, and the spread's fairly tight, and I really have just developed a very tight, very good feel for the market in terms of studying it. I still follow the pound and pound Aussie every single day. I look at those charts, but again, my main focus has been on gold because it moves, and again, it's been consistently, I've been able to consistently hone my edge on that market, and it's working. So again, choosing what it is that works for you. Now for me, time frame wise, being in Perth, I can virtually trade all 3 sessions: Asia, London, New York. Now I don't often stay that late up into New York, hence I miss out on some very large moves, but I will usually stay for that first hour, hour and a half, and in most cases there's a good 25 to 50 pip move either pre-market and at the beginning of the session in that gold market almost every single day. So again, I have that opportunity. Now if you're not able to trade all those sessions, or you're only trading one session, if you're in London or in the US or Canada, wherever that may be, then obviously the New York time frame or perhaps the Asian time frame may suit you better. But again, whatever instrument it is that you're trading, for me the most important thing is that the spreads are reasonably tight and that they move during those times that I'm available to trade. Now, a lot of people selling courses and everything else out there, and there's tons of information on the market, and what I want to emphasize with this is everything that I'm talking about on here is real-time trading. It's not stuff where you're going to take some indicators and a crossover and it works one day and it doesn't work the next. We're talking about developing an edge that you can apply that's robust and reproducible on a day in and day out basis. Now, I get a ton of emails regarding lots of different stuff, and I'm just going to lay it out there right now. What I talk about here every single day is exactly what I do. The high and low of the day, I look at that first 2-hour window specifically. I'm looking for the stop hunt, 1, 2, 3 to the high or to the low, and the trade that comes along with that on the engulfment pin hammer for the move for 25, 50 or 100 plus pips back in the other direction, or with the trend if it is a stop hunt into the trend. It's that simple. So talking about simplicity, so again, the scheduling about when you're able to trade. Obviously, if you can't be available for certain times, your edge, your model needs to be able to mirror what is going to work consistently based on that scheduling time for you. So then the edge, how are we going to do this? We've talked about why, what, when, and how. So again, you need to be able to go into each one of these and deconstruct it in such fine detail that literally there is no stone unturned, because as you keep going through your process, little windows will open up inside of this that will keep revealing things to you that you are not crystal clear on or don't have them completely fine-tuned, combed with. And again, that's a process of evolving. As you learn and develop those skills and get better and better, you're going to see little windows opening up where you can keep refining that process and mastering each part of that window. So when we talk about the edge, again, I talked about, for me, simplicity. Everything about what I'm doing is simple because I can duplicate that. Very specific around timings, a lot of reasons why. Again, the market's moving those times, but also there's a reason to keep myself off of the screen. So some traders want to trade all the time, and some traders can do that. And there's a lot of traders that trade all the time, and all they do is blow their accounts up repeatedly. My number one goal is to not lose money. My number two goal is to grow my trading business. And that comes back to your why. Why are you trading? You need to be so crystal clear on this that there's never any hesitation in your mind about bending your rules. And I can tell you that with absolute certainty, because having broken rules repeatedly and blowing up accounts before finally just turning the corner and just working and chipping away until, so many painful learning experiences. But if you keep inching forward, eventually that compounding effect starts to work in your favor. And then you have to really focus on not getting overconfident, not self-sabotaging all the progress that you've done. So again, there's a whole system of checks and balances that build into each one of these levels, because as you get to certain points, and I know a lot of traders have emailed me and told me some very gut-wrenching stories about what's happened to them financially from trading, blowing up accounts, but not only blowing up accounts, but losing massive sums of money. And a lot of times that's hard to recover from, especially as you get older, or if that loss is so large that it impacts not only yourself but your family and other things. So again, number one thing, consistency, is being crystal clear on your vision as to why you're doing this and who it is you want to become, what it is that you want to become and create. So that edge has to reflect what you're able to do on a day in and day out basis. Simplicity, duplication, needs to be robust enough to handle different market conditions. Not meaning that you're trying to trade every move, but you're going to see variations of different presentations of the market. You're going to see M patterns, W patterns. You're going to see 50 pip stop hunts that go vertical. They're going to see a blow off move. You're going to see 3 push patterns. You're going to see 1, 2, 3. So there's little variations that ultimately are all part of the same package. But again, that robust nature needs to become second nature in terms of you being able to identify those in live time. And again, coming back to timings, that just helps crystallize all of that so that you can reproduce not only being able to execute your process, but execute your process and extracting profits from the market, not getting shaken out of winning trades, not hesitating to get into the trade, not counter trending a trade that's in place just because you want to get into the market and you're counter trending a breakout, those sorts of things. Knowing all of the little nuances and then being able to get that consistency and just keep scaling your trade size up. So again, I talked about developing 2 or 3 really simple setups. We've seen a couple of them this week already that yielded more than 50 pips. So even just getting away from trying to trade every day, there's 50 pips every single day, but even if you're getting 50 pips a week profit, that's better than losing 20 pips a day. So getting focused on extracting or trading the process, the perfect process around only the best playbook setups. So again, that comes back to developing your playbook. Reviewing your process, understanding every step of the process in terms of identification, live time, having a plan when you go to the market. If your plan doesn't present, you have a thesis, if it doesn't play out, what are you going to do? Are you going to trade anyways, or is there a counter thesis for a different setup? Is there a timing to that setup? Where are you going to take your profits? How are you going to decide? Are you going to pre-program? I put all of my profit targets and stops in right away. So that way, as you saw the other day on the pound, a 75 pip candle, no profit target in place. Sometimes you'll see on the Fed and stuff like that, the market will move 100 pips and come back in 1 minute. So you've been up 100 pips and now all of a sudden you're back to where you started. You didn't take any profits. All the little things that will come with fine tuning, everything in extreme detail related to your edge, and that's on the live screen. So I get this question all the time about back testing. You can back test till the cows come home, any type of system you want. I don't even care if it's an algorithmic system, but you better run that system perfectly in live time the way that you back test it. So if it's an algorithm, don't shut it off. Or if it only runs at certain times, make sure you run it every single day at certain times, regardless if you're in a drawdown or you're in a big trend. Because if you're in a drawdown and you shut it off, now you're going to run and miss out on the trend, but you back tested all of those results. And if you're in live time and you can't execute the perfect playbook setup because you're scared to get in, or you took some other piker trades in between that weren't part of your playbook and you got beat up, and now you don't want to hit the best playbook trade, or you get in and it goes sideways for 30 minutes, so you get out and then you watch it go away 75 pips. So you have to be able to back test exactly how you're going to trade in live time. You need to be able to go in with the right size so that you don't have to worry about if Brent, like I talk about this, Brent Penfold says, write down the loss on paper before you go into the market, and then be okay with that. If you're not okay with it, then you need to reduce the size of that trade that you're going in on. Know exactly how much it is you're going to lose, even if there's a few pips of slippage. So a lot of traders trade and they think, I'm going to lose 20 pips, so that's $200 or $2,000, whatever that may be. But they failed to calculate the exchange of their trading account currency from the instrument that they're trading, and it might be another 14 cents for every mini contract, or $14 for every standard contract, that sort of thing. So understand exactly what the exchange is on the instrument that you're trading, so that when you calculate your risk, all those little things, slippage, put your stops in, all those things, do all the things right that will ensure a gain that you're going to become consistent. So if you're not taking the losses that you're supposed to take every single trade, but in back testing you took all the losses based on your perfect trading system that you back tested. But if you're not doing that in live time, or you're averaging into losers, or you're taking on some other trades in between, your results will never be consistent. So again, focusing on your best playbook setups, whatever those are, 3, 4, 5 trading setups. In the beginning I would focus on 1 or 2, and I would master those, and then I would look at adding in some other ones. So again, fine-tuning every detail. This is critical. And then you, or personally, removing all the barriers to performance, whether those are external. So okay, your buddies call you up to go out for a beer, or you got some social engagements, so you're missing your trading time. Okay, well then you need to figure out what's more important. If you're missing your trading time, but that's part of your objective is to your why. Now again, I'm not talking about you want to take a Friday off and blow it off. That's up to you. I'm talking about things that are going to interfere with you being able to execute. I have 3 young kids. Now luckily my kids are usually at school at night. If I'm trading the US session, they're pretty good. They're doing their own thing. They're old enough now, it doesn't interfere with me at all. But if you have young kids around, or you're have a busy life in terms of your day schedule and you can't be trading, or you're trying to juggle things while you're trading, that's going to become a problem. You're going to be making mistakes, you're going to get frustrated, you could get angry, you could become emotional, impulsive, and illogical on the screen during trading time, and that's where damage can be done. So again, if you're having trouble with your spouse, or in a relationship, or you're bringing things to the screen in your mind that are a problem, that's going to spill over into your results. Now with that, we haven't dove too deep into preparation, mindset training, all of those things, but we will get into that. I've talked about it briefly in other videos, but I spend a certain amount of time before each session meditating. I exercise in the morning and in the afternoon. I've got a very active life myself, so it's important that you're doing things that will de-stress you, calm the mind, allow you to refocus and reset yourself, and again, coming into trading time so that you can perform. Not only perform, but be high performance. So you've got to be able to master the edge. Okay, and the 12 candle system for me is so simple. Now, you're not going to hit every single trade. You're going to make mistakes. You're going to do things, but the key is learn from each trade. And again, keep fine-tuning that. Every little detail, know every little nuance, everything right down to the minute. Know exactly what you're looking for. Mastery. And then externally, are there other things that you should be doing? I talk about this in the 7-step daily routine for high performance traders. If you haven't gotten that audio file, download it. It's on my blog. It's a free file. Create your own daily routine. Refine it. Keep improving it. Keep learning. Keep improving your trading. Get fit. Get healthy. Exercise. You know, I don't need to explain all the benefits of exercise, but it allows your mind to calm down, reset your breathing. You know, it de-stresses your physiology, blows off steam. If you had a bad day trading yesterday, get up in the morning and do your exercise again. Reset your mind. Movement energizes the brain, and you know, motion creates energy. Even if you got blown out, a great session of exercise can help reset your brain and reset your belief and your confidence in getting back to the basics, mastering those basics, and again, just focusing on one good trade. Do one great trade, one perfect trade, review it, and then move on to the next trade and do the same thing, and just keep building on one good trade at a time. So screen related issues. So again, external, your surroundings, your relationships, your health, all those things externally, they'll affect you, but your screen related performance issues need to be honed in live time. So again, I talk about this, you know, I get all these emails from people talking about, you know, just silly stuff because they're completely clueless as to what's actually happening on the screen during live time. Holding of price, flashing of the spreads, the fast impulsive movements, and then it doesn't go anywhere. Just little things that are designed to fool you out of winning trades, trap you into losing trades, get you out of a big winning trade, scare you out of putting size on a trade. All the things that will prevent you from not only becoming consistent and consistently profitable, but becoming consistent and consistently profitable with size. Okay, so again, coming back to backtesting, backtest what you're going to be able to do in live time. Spend 10,000 hours at the screen watching and making great trades, and see if you don't improve, as long as you're not just chasing stuff with no plan, no idea of exactly what it is that you're looking for. So, you know, people go out there and they spend thousands of dollars on courses, and they're useless. 99% of them are useless because, you know, there might be an edge there, but it's only an edge if you know exactly when you should use it. People try to use it all the time. They get chopped up and they said, I just spent $5,000 on a course and I lost all my money. But they don't even understand that the course is one thing, but then even now actually whether or not you yourself can actually trade that system in live time is a whole nother issue. And then if you can you grow it consistently and patiently with discipline over time? So these are all the little things, but if you can do that, and I know there's traders doing it because I'm seeing their results every week, and I know from my own experience, I talked about this, the compounding effect. You can easily, if you are disciplined, easily do 5% a day in this market. Now you might not do it every day and day in and day out, but really good traders who understand what to look for and who are patient know. Like gold is giving off 25 and 50 pip moves all day long. Now, I wouldn't suggest trying to trade those all day long because you'll get caught inside and you'll get jammed in and you'll get stopped out and all that. But when you know exactly when you're looking for trades at certain times and where there's 25 to 50 pips or more, as we saw again last night in the US session, by patiently just waiting and coming at the right time, letting the market show you what they're doing and waiting for that price action and timing window to confirm your setup, and then executing your trade, putting your stop in and a profit target, and then walking away. That's as simple as trading can get. I don't worry about commitment of traders reports. I don't care about volume. I'm not worried about, you know, I get all these things about the market, all these other things that I should look at. I don't want to look at anything else. I do not want to look at anything else. Why? Because my system is already working and it's simple. Why would you want to add more stuff in? Simple. Simple. So consistency and becoming consistently profitable, and then adding size, master every single step along the way. If you do that, peel the onion back, every little step will keep showing you where you have yet to master those little components, and just keep chipping away. Just keep chipping away. As I told my son today, he's playing state floorball, I said, what's the one thing you can do this week to make yourself better from last week? Just pick one thing. Master that for the next 30 days or the next 10 trades, whatever that may be, and then work on the next thing. And just keep working on one thing and getting better every single day. Don't blow yourself up. Don't do stupid things at the screen, which are very easy to do, which is why most traders don't get that consistency. They do everything right and then they do one thing wrong and blow themselves up. And it is very easy to do. As Peter Brandt says, you're only ever one trade away from blowing yourself up. So hopefully you got value out of today's video, traders. Developing consistency and becoming consistently profitable, step by step, one day at a time. One day at a time. By the inch, it's a cinch, and by the mile, it's a trial. So keep it simple. Compounding effect. Just keep growing those little incremental growths. Build on that. Don't do anything. Don't be in a hurry. You know, when you're in a hurry, you end up going right back to where you started in a lot of cases. So again, thank you for a ton of great feedback. Thank you for hitting the like button. Thank you for a lot of great comments, and hopefully we answered a lot of those questions. You know, if there are other questions, keep them coming, but develop the mastery of each one of those steps. 1% better every single day. Let's take a look at yesterday's charts. Have a great trading session, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading. Continuing our discussion on developing consistency and becoming consistently profitable. Yesterday on the British pound, we saw a beautiful example of a market, just pre-market, hitting the previous day's high, 1, 2, 3 engulfment, just in the pre-market, and then we get the 1, 2, 3 into the beginning of the Europe-London 12 candle window. They hit the low of the Asian session. Then they reverse. We get our 2-bar reversal, and the last bar, the 4th bar of the first hour breaks, continues breaking up through the 2-bar reversal, triggering breakout orders long with a 1-bar stop after the stop hunt. So again, the market triggers the breakout orders, and this is a great thing to understand. Breakout traders are in the market at this stage. They've traded the break of the previous day's high, whether they're end of day, whether they're trading, you know, on the 15-minute, the 1 hour, whatever that is. They have a pending order there perhaps, but they've been taken in long, and then the market proceeds to come back from a high at 96 all the way down to 61, so approximately 40 pips. And again, most retail traders, unless they're, you know, they have a 50, 80 pip stop on their end of day model, would have probably been stopped out if they were trading the break of that during the day on the, you know, again, 5-minute, 15-minute, 1 hour, whatever. They probably had their stop at the low of Asia. And again, you see how they hit the high, the previous high of the day, then they go to the current low of the day. So coming back to a really simple thing to understand. Everybody says, oh, you know, trading intraday is just noise and it's risky. I don't care if you're trading end of day or intraday, but if you're trading end of day and you have a 40 pip stop, I'm just curious how big of trade size you're able to go with if you're going to take 40, 50, maybe 75 pips of heat or more before blowing up or getting stopped out. So again, the reason why I am attracted to this market is that we can target a 1-bar stop, and a 1-bar stop with asymmetrical risk reward with size as you get consistently profitable or consistent at executing your edge. You know, don't even worry about size, just execute the trade, and you'll notice that this high to low reversal, once it breaks the high, forms a peak formation low. 3 bars down, 4 bars obviously with the small doji, but a 1, 2, 3, and then the reversal. They hit the stops up top, they hit the stops down below, and then they shift the market. And that market again, targeting, we get our breakout, and maybe you're targeting 50 pips, maybe you're targeting more than 50 with our measuring tool. Again, just to clarify, on the 15-minute charts, I will usually target 2 times our Asian box, or if we're in London, the London box, whatever that is, in an explosive move. If it was a large high of day, low of day trade, then we may only target one full expansion, meaning that if they were trading in a range, I would only be targeting one full expansion. So now we head into our breakout, and a lot of traders would be tempted into shorting this in the gap time. Now you'll notice that as we follow this up, okay, our high bull, which we talked about, is taken out, but we're in a breakout now. So again, this is not a short. This is putting a high of the day in place. Now, when the market rolls over, and if anybody shorted this bear pin bar, which again, in the gap time, now you want to be thinking 3 pushes, because this market is a breakout. This is not a vertical stop hunt. This is a breakout at this stage. But if you did short this bear pin hammer on the second right shoulder, once the market breaks this lower level, again, you need, or I would be going to break even for this very reason, especially where we're at in the timing window. Now, this market, as it evolved and we got later in the session, it was very clear they were going to go up again and hit the stops. And this 1, 2, 3 to the high is exactly that in our timing window. This is a stop hunt, an inside bar, and then our bear pin hammer. Now, a really good question. What do you do when they go up one big bar and they go inside like this? Well, this is exactly what you want to see. This is a stop hunt to the high of the day. 1 push, 2 pushes, 1, 2, 3 to the high, inside bar, bear pin hammer. That's our 1 bar. Once we see the bear pin hammer at the high of the day after the stop hunt, that's the key. After the stop hunt, and they go into consolidation, this is our 1 bar stop. They break the low of the bear pin hammer, and they come right back down to where that market started from. Hit the low of the day, the low of the Europe-London day, and not only 50 up plus, but 175, 100, whatever down. So again, very simple. Breakout traders triggered. They come down 1, 2, 3 inside bar. They break the high, move back 50 plus, and then again the 1, 2, 3, the inside bar, the bear pin hammer for the reversal back down. Very simple, straightforward setup. This is something again similar to what we've already seen this week. Keep it simple, traders. This is duplicatable. This is scalable. 1 simple trade setup over and over again, once a week, twice a week, whatever it is. You're going to see this again and again and again. Our friend Goldzilla never disappoints. We saw that market roll over again in the Asian session. So again, just coming back to some simple things. We talked about this lower double top yesterday and the market dropping down. But then looking at our first hour, pins on the bottom in a down market, and then we get the reverse bear pin hammer at the end of the first hour. So again, we're in a downward move. The market's made peak formations. They've dropped it down into the beginning of the session and gone sideways. We get our bear pin hammer. When we get a pin bar in the wrong direction, and then you get a pin in the trend direction, that's going to become a flip zone. That pin will become a flip zone for a measured move at a minimum of that geometry. But also we talked about this yesterday. We already had the potential for a measured move as that market came out of a day zero scenario, narrow range bar after a very large week last week. And we see 2 full expansions were hit. But coming back to the whole idea again, each session, looking for the stop hunt. The market pinned up into the high and went into consolidation in our equities hour, the middle hour, before dropping down, going sideways, and continuing to drop down. They put a peak formation low in place, and then they worked down into the low, worked down into the low again, and then came down a third time. Just as we head into the London equities hour, we got the inside bear pin hammer at the second candle of the London session. And that market was at double zeros, the previous day's low, for the fast 50 pips stop hunt on the traders who were short in Asia. So again, simple concepts. Who's in the money? 1, 2, 3. Let me just zoom in on this. Okay. Timing window. It's the same stuff every day. 3 pushes against the peak formation. It's a squeeze. Bull pin hammer, 50 pip stop hunt. Tweezers at the high. They engulf the high bull candle. So again, they pin it. So we got breakout traders in the market. So if they break the low of this bear pin on the next candle, shorts are in the market. It's a 1-bar stop. You're at the high after a 1, 2, 3. 45 minutes in the direction of the stop hunt. 45 minutes to an hour in the direction of the stop hunt. Remember that. Again, each session, 45 minutes to an hour for the stop hunt to occur. Okay, now on a rare occasion, we're going to see an open drive right off the beginning of that first candle or second candle of the 12 candle window. But again, 45 minutes. The market was sideways. We had 3 pushes. It's a squeeze. 3 pushes into the peak formation low. We go into the US session. In the gap time, they make a new low before coming back. So again, a peak formation. 1, 2, 3, 4 bars. 45 minutes. They put a new pin bar in and go 1, 2, 3, 4. 1 hour. We get a reverse bear pin hammer at the high, stop hunting traders who were short from the high of the London session. Remember, they're going to go after who's in the money. They hit the stops, reverse the candle, 1-bar stop at the high of the US session in a downward market. We have a pin on the bottom. So traders, when you see this, again, especially after we've rolled over from a previous day's narrow range day and they've worked across the low. Remember, we talked about the 3 things that markets do. They break out, they pull back, they trend. So breakout, pull back, trend. Breakout, pull back, go into a trading range. Okay, this is a great example. They broke out, they pulled back, they went into a trading range, they hit the high, pulled back inside, hit the low, pulled back inside. 1, 2, 3 to the high for a 300 pip move down. So again, an example, you could have took 50 pips. It doesn't matter, 50, whatever, 50, 100. But this is just again fine-tuning your skills. You might have had a trade in place, had a second trade trailing. Again, this is a 100 pip box, 2 times that box. Okay, 100 pip box they're trading in. So 2 full expansions is a 300 pip move. Just little things that you can again keep improving on. If you're missing out on some of the bigger moves or how to capture more out of a winning trade, but just keeping it simple, 1, 2, 3, 45 minutes to an hour to execute the stop hunt. If you do not see it in that first hour, expect the equities hour to be breaking out. If you're not in this move and they go 1, 2, 3 reversal, do not be afraid to enter the trade in the opposite direction. Again, the market was down. This is a stop hunt up into the trend. This scares traders out of taking this because they think it's such a strong move that it's going to go all the way back to the high of the day. The timing window is critical, understanding that when this market reverses on the first candle of the 3rd hour, after a 1, 2, 3 that did not go in the first hour, this is a stop hunt to the high for the move back down inside.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.